Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 11th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up of what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave 1 is done, working on wave 2 down. Is this correction over and we're finally going to go breaking out? Or do we just kind of chop and grind and push lower? If you look at 4 years ago when we talked about this topping out and reversing, we did say it would be a multi-year correction. So it's definitely in the multi-year correction area. But notice this price action from the original move down, kind of chopped, went up, came back down, went up, came back down. We finally popped a new high before we went lower low. Well, notice this price action with a pop and then a lower low. Notice this smaller version here. Came down, we popped, we kind of chopped around, and then we finally pop, make a higher high. And is this the one we go lower low again? Or is this the end where we start just grinding higher and higher? Well, to make things easy, I like things easy and simple. There's a lot enough in today's world and life that's complicated. So let's keep it simple. As long as we're below this pink box, we still have pressure to go lower low. Once price is above this pink box, then it's likely this correction is over and we're onwards and upwards to a multi-year climb toward our target off the chart up here at that 130 to 140 area. So the plan is that whenever this wave 2 is done, whether it's here, whether it goes much lower down to our original kind of target zone, or we go somewhere in between, wave 2 is going to end, and we're going to go breaking out towards that 130 to 140. I got to have my target zone 120 to 140, sweet spot 130. So we'll leave it at that. I say 130. That's why. So is this over? We're headed to 130, or do we go lower low? Or remember, no matter what happens, if we start breaking out, get above the pink box, the likelihood we're going up toward that 130 target is very high. We break down lower, we're still going to go to that 130. We continue this stair step lower and lower, and we get toward this target zone, which we talked about since 2008 down here. We expected this move up to run somewhere between that 115, 120 target. We stopped at 114.72. Now, this correction was expected to be more than likely a deeper correction. So I was looking for somewhere about a 618 retracement around 87 to a 786 around 80. So this is why this target zone has been here for a very long time. Over 4 years ago, as this was moving up, we talked about once it's over, we're going to have a multi-year correction, and ideally we'd like to see a little bit deeper retracement, especially if we can get down to about a 618, somewhere around that 87 level. But it doesn't have to. There's no, in this case, well, the dollar index cannot, under any circumstance, go breaking out to 130, 140 without us coming at least to 87. It may turn out that way, but it's not a guarantee. We could reverse from here. So all that in mind, simplified, we're below the pink box. We do have pressure to go lower low. If you look at this last move up in the beginning of this correction, we kind of had a nice drop and some chop around, and we chopped and grinded, had one last pop to a new high, then we went lower low. I do remember, and we had very strong conversations about, well, this run up, there's no way this could be, in my humble opinion, wave one, and this moved down like this, wave two, and we were going to go breaking out. So even as this thing ripped higher, I said, this is not the breakout. We're going to go lower low. And then as we got to lower low, as we started talking about this low, we popped. I said, we still think we're going to go lower low. We did it. This one, we did it. So as the next one, I'm still not convinced that this is the end because we're still below that pink box. But what if we don't go lower low? Well, if we do get above this pink box, then I think this is done, in my humble opinion. I do not see us going up above here somewhere and breaking above that pink box, then coming lower low, and then going breakout to 130, 140. We get above this, I think it's onward and upwards toward that 130 target. Now, I will tell you, it is possible you could get above this, get a correction, and then still go to 130. I just don't think if we get above the pink box, we would ever get a lower low before then going up to 130. Got it? So that's the plan. Even if we get above this, we don't have to, but we can look at this as just one big move up, and we get a 618 retracement out of that, and then we bounce and go up. So I won't say, hey, once we close above this pink box up here, we can never come back below it. Sure we can. But we're just not likely, extremely, well, I'd say it's non-existent, but extremely low probability. If we break above the pink box, we would ever come below there, then go onward and upward. I think we get above this, we're going to then start stair-stepping, multi-year stair-step, working toward that 130 target up there. So let's jump into the charting platform and show you more of what's going on. We're kind of stuck at this daily magic fibbo. We dipped below, we closed above. We tried to rally, we came back and bounced, tried to rally, we came back, dipped below, and it kind of looked like, well, maybe we'll go lower low. Well, we just kind of stuck here. So this could continue. There's no reason we have to go breaking out or we have to go breaking down. But the more we sit here and the lack of a bullish reversal here, the more likely we are going to go lower low than these two swing points right here. So you remember the conversation when we started talking about this, our software, the magical Market Price Anticipator right here, it anticipates market price conditions. And when we got up there, we expected a pullback. And we made a statement back then, and this goes back a couple of weeks now, that we were likely going to get a retracement back toward we broke out from at least. But then when we bounced coming in the last week or so, this bounce was to a lower high. And I kept warning you as the daily got back overbought and our weekly was overbought, we were due for a bigger retracement. And the daily simply did this, and now we cycle down. Is that enough to go breaking out? Maybe, maybe not, because we're just kind of chopping and grinding down here. Well, when you look at the weekly, we have our trend momentum PAI, steep slope angle separation. What's unique about this software is when you get a PAI hook and a trend momentum cross. We call that the hook and cross strategy. You get a hook and a cross, the lower time frame cycles, highest of highest probability. So my weekly is smoking to the downside. What happened? This is why we said we were expecting a bigger retracement. And the daily did cycle down. Now, is that the end? Is this the end? Or is this daily what we call a phenomenon of slingshot lower and lower like we did here to the upside. We kind of moved up. We started slingshotting higher and higher and higher, and we just kept grinding higher. What did that do for my daily cycle to do this? This behavior is indicative of when you get that phenomenon, slingshot, 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 and this time frame is on a daily, then the weekly is definitely cycling up during that period. See it? The weekly was cycling up during that period of the daily slingshotting higher and higher. Well, Mr. Tucson, Ian, James, Alan, what if we're cycling down now on the weekly cycle? Software is oscillators, and it goes from one extreme to the other. The only time it does it is when you get through this slingshot phenomenon where you can ride out and overbought for long periods, or you can ride out and oversold when the slingshot phenomenon hits, like we did over here as well. We slingshot lower and lower. We rode out for a while going there, and then we rode out climbing higher when we were slingshotting higher and higher. But this phenomenon is very interesting because that's where the hook and cross comes from. A weekly hook and a cross steep slope angle separation last week, as we were looking at that, we said we're likely going to get this, especially once we break below this little swing point. We were going to go and test our 618 retracement off the prior low up to the high. We would test that zone. So on the charting platform, that's exactly what happened. We closed below that former resistance, support. We broke below it. Where did we say we would go? We said we'd go to the daily magic Fibbo, which is this line, that big orange line, and slash our 618 from the recent low up to the high. That's my 618 retracement zone. That's exactly where we went to. Now, what if we don't bounce to go breaking out and we actually start breaking below this light green color box? Then we're going to go lower low. Well, this is what I warned the last few weeks about from the bigger price action. We had an issue that if we don't go, since we had that bounce to a lower high, and this bigger move looks like a three-wave correction. That move up, this move down, and that move higher looks like three-wave correction. The prior trend was to the downside, and if you get a three-wave correction and a prior trend is down, more than likely you're going to go lower low. Well, that's a if. Is it that? Well, we started to diagnose and bring this down. What if this was the 1, 2, and that was the 3? Could possibly be, but it fell shy of the normal parameter. It at least goes minimum of 1618 and generally above that. So then when you have your wave 4 correction, you don't go back into the area wave 1. So what's wrong with this? It's a 3-wave, so it's more likely corrective and still needs to go lower low. But if you're on the bullish side of that equation, you can say, well, this could be a 1, 2, 3, could have been, but now that we down here, we overlap this. So that's not a particularly bullish sign of a 1, 2, 3 and wave 4 overlap. For an impulsive wave to the upside, which would be very bullish, this wave 4 correction cannot come into the area wave 1. So what else could it be? Well, you could have a nested 1, 2. This could be the first 1, 2. This could be the second 1, 2. And then we're looking for wave 3 of 3 to come out and go much higher. Well, this price action for the last multiple days is not really suggesting, ooh, this is real bullish. We're going to the moon, Alice. We're going to rip up here very quickly. Not real bullish looking, but we're still above support. So if you look at this as that 3-wave correction, and again, the proportions fit. So it looks more 3-wave at the moment than an impulsive move. But to the downside, we're holding support where we should. So what if we and Bruce, we actually get below this lighter color green box? Then the odds chip that we're going to go below this swing point low. And if this remains a 3-wave move, A, B, C, and that remains three-wave. Once you break the swing point low, it sets the tone, highest probability you're going lower low, right? Everybody good so far? So this is why you need to be careful, be, cautiously optimistic if you're expecting a bullish run out, or if you're big and bearish. We got to really break below that swing point to set the tone. We're going to go lower low. So what do we do in those circumstances? We do a Ron Popeil slice and dice. We compress and compact the channels. Bottom line, in my humble opinion, we close above 102. Then the dollar is going to rip and rally toward that 104 to 107 level. Basically this bubble up here, about a 3+ point run. That is a high probability. The rest of this chopping in here is not real high probability. Once we get a low below that swing point where we had the first move up, correction, next pop, we break that low, which is right around, say, 97. We got to close below 97. Then the likelihood we're going to make about a 3-point run to the downside becomes very high. So looking at all this price action, where's my high probability areas? Above 102, not just a wick above 102, but actual candle body closes above 102. Then the probability we make about a 3-point run to the upside is very high. If we close below 97, not a wick, but a candle body on this daily chart, for example, the daily candle body closes below 97, then the likelihood we're going to drop for about 3+ points is very high. In the interim, while we're chopping sideways, as long as we're below the previous swing point, which is below 102, and we're holding at this light green box, then maybe we just do more of the same, just chop and grind in here. Whatever you do, if you're trying to trade this, you need to be aggressively taking profits. Otherwise, I would not be in a big-time long position just yet, and I would not be in a big-time short position just yet, because I want price to prove what it's going to do. And as long as this still looks three-wave and we're unable to break new highs, aka above 102, then this looks more bearish. But again, we're stuck at the support zone, so we got the bearish move we were looking for. But if we start breaking below that, this little green box, that tips the odds we're going to go lower low than this swing point, which would put us down here in that 97, 94, 95 area. Why is that important? At 97, 96, it's below that swing point. So notice where these extensions are down here. This red line and this kind of goldish brown golden line. That's my 1448, my 1272. So what I said was, if we close below 97, the likelihood we're going to go down and visit 94, 93, 92 zone is extremely high. We close above 102, the likelihood we're going to go visiting 104, basically 105, 107 area is very high. Where does that 105, 107 area come from? It comes from the prior move from last year. When everything was short the dollar, anything but the dollar, we had that swing point up here, and we had a swing point low. Where's that 1618? Basically 104.77. That's right in the neighborhood of 105. And then there's your 786, 107. So that's why this target is here. If we break above 102, where we're going to go, we're going to stair step our way right to that target. Boom. So you got a good 3-point run. What if we break below this swing point here? Then we're likely going to go lower low here. Everybody good so far? So this is why we got some target zones to watch for. We reached the initial one, so this baby can really be removed as far as that oval, and that leaves us two ovals. If price gets above 102, we go up here. Price gets below 97, we go down here. Pretty simple, right? Yes, yes, which one? In the interim, we're going to chop around. But this could still be bearish even with breaking above 102, and I'm bullish to the point where we're going to go visit that 105, 107 level, this bubble. But what happens if we get to that bubble, William Bruce? What if? It could still turn down and still go lower low. That's why when I keep telling you, in order for us to call this bottom reversal intact, and we're ready to go blasting off to our target of 130, 140, we got to get above this pink big box up here. So to simplify things, that's why we show it on this chart where we show, hey, Mr. Tucson, we get above this, we're going to break out and start moving toward that 130 target. We stay below it, we still have pressure to push us lower low. And then we compress and compact the channels in here, and it shows that are we going to get there? Because just because we rally into that box does not mean we're above the box to go on and up and that this is done. We could rally toward that box and still fail and still go lower low. Just remember, I'm 1,000% confident on a 100% scale. We're ultimately headed to that 130 target. Even if we continue to make a lower low, another lower high, lower low, and we even come down to our original zone between that 8780 uprights, that goes back to 2008. That was the initial move up, took 15 years. We're in 4 years and counting. We could continue this another year or so, whatever, to come down in here. Or we go breaking out. We get above the pink box. The likelihood we're going to 130 is very high. Up and until then, even if we rally to it, we still could go lower low before we go to 130. Or we continue to stair step toward this target. We're still going to 130. So this is why I say 1,000% confident on a 100% scale, because all roads lead to us going toward 130. The question is, do we need to go lower low before we get there? Do we need to continue this even longer to reach this 87-80 zone before we reverse and go up there? We shall see, only time will tell. So that's why we go to the charting platform and compress and compact those channels. And this is showing that big reversal. We had that move, and could this be the end of that wave two and we go breaking out? Yeah, we get above this pink box, we're going there. But we also have something that occurred from COVID low up to this is COVID low there, up to the current high. So I'll stretch that out a little bit for you. So from this low to that high, the rule is, if your price action closes below the 618 retracement level, you have a high probability, about 75% likely, you're going to make a trip down to the extension of 1.1448/1.1272. So that is still looming, because what did we do? We closed below that 0.618 zone. Close below it for not only candle bodies, but not only, that's a weekly chart. You see candle bodies close below. And that says we do have the option to still go down toward that 85-82 zone. Well, guess where that's located? That's my original zone between that 87-80 zone. That's right in the neighborhood. So am I guaranteeing we have to go down there? No, we don't have to do anything. But isn't it kind of interesting that from the original reversal point, this is the COVID low, but on this low, which was 2008, that 618 zone is at 87-80 zone, but off the COVID low, that retracement zone is right here on this platform. That is this 98 down to 94 zone, and we already reached this. So it'll be ironic in a sense that, well, Gary, you expected a 618-786 retracement to go from the 2008 low, and price action actually did it from the COVID low, where we got the 618-786 retracement before breaking out. So I still have more bearish than bullish at the moment. Why? We're below this big resistance zone. That's still more bearish for us to go lower low. We have the COVID low up to the high where we broke that 618. giving us 75% chance we should go lower low. So that is the pros and cons. We got a few more checks on the negative side, meaning we're going to go lower low. Then right now we're going to go bullish. But that totally flips the script if we get above this pink box. Then we're going to go onward and upwards toward our target where? 130, 140 up here. So again, I know you can't see a lot here, but this is the main target we're going to. I'm 1,000% confident on a 100% scale. That's pretty darn confident, wouldn't you say? That's where we're ultimately headed. The question is, do we need to go lower low first to get up there? Do we need to get the much deeper retracement and reach this zone, then go up there? Or do we start breaking out above the pink box now with the low we have in place? We're going up here. So that's what I mean by all roads lead to us heading toward that 130 target. Amen? All right. So as we compress and compact the channels, now that you see that bigger picture, now let's zoom it in a little bit tighter. That's why I just went over what I just said a moment ago. We close above 102, highest probability, we're going to go visit that 104 and change, basically 105, 108 level, 105, 107. So to simplify things, you get a close above 102, which is a swing point high right there. We close above 102, we're going to make a trip toward 105 and above. Three points, 3+ points. If we close below this swing point, which is right around that 97-ish, so say we close below 97, then we're likely going to take a trip about 3 points down to go visit that 94, 93, 92 zone. Amen? So highest probability, we get above 102, we're going to take a 3+ point up. We close below 97, we're going to take a 3-point cruise down. And what it doesn't mean if I close above 102, then the next day I have to be sitting at 107. No. Or 104, at 105 here. It could stair step its way, but the probability that's where we're headed is off the charts, very high. And the same here. If that's my A, B, C correction we were talking about, you break below that low, that sets the tone, we're going lower low. So that's why it's a higher probability 3+ point down, or we close above 102, 3+ point above. Got it? In the interim, could this thing chop around and continue this? Yes. And the more we're stuck at the support zone, but we're not bullishly bouncing, that kind of says we got to go lower low. So in the small incremental type of trades, if we close below this lighter green box, from the recent low up to the high, what is that green box? My 618786 zone. So if we start closing below that level, that's why I'm going to throw out that 99. We close below 99 with a daily candle body. We wick down toward that area, but we never close below it yet. But in Mr. Tucson, what if we get a down candle and we actually close below 99? Then the likelihood we're going to go visit this 97 down here jumps to 75%. I like those odds, right? So we got the smaller move. Hey, we closed below 99. We got about a 2-point run coming down to make a lower low. Once we get to that lower low and we close below 97, then we got another 3-point run coming down to make a move toward that 94, 93, 92 zone. Fair enough? And then, as long as we're below this battle zone, what is this green line? That's a major battle zone. It goes back a year plus just on the resistance side, right? A year ago, we tried to break it. We couldn't. We retested resistance, 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 resistance. Couldn't do it. Resistance, resistance. Couldn't do it. Couldn't do it here. Then we finally broke above. We retested. But that's why about a week or so ago, when this bounce made that lower high, I was like, be careful. We got our daily software overbought. We got our weekly overbought. The likelihood we need a push lower is extremely high. And the likelihood this is going to go breaking out right now is extremely low. So we use the Market Price Anticipator software along with technical picture. and my God-given talent to read and interpret price to help you decide what is my higher probability outcome and where those opportunities lie. And right now, this could easily go breaking out. Sure, it closed above 102. The plan is to take that long. Well, you could trade UUP to the upside, buy call options on UUP, buy shares of UUP. There's many ways to play it. Or if we know the dollar is going to go ripping higher, the euro dollar Forex and the pound dollar Forex pair are going to go lower. If the dollar goes breaking down, then the euro dollar and the pound dollar pairs are going to go much higher. That's kind of the plan. It's inverse relationship. So there's ways to play this breakout or breakdown, whether you trade the dollar index directly or you trade it via another vehicle like currency pairs. Fair enough? All right, we're going to go over those in just a second. So in closing on this, I know we spend a lot of time. The reason we spend so much time on the dollar index, because if you know where it's going and you know the make or break levels, and once it breaks or one way or the other, you know where it's going. So we have big bubble up here, we have a bubble down here, and we're in the middle. So you could say, well, we got a 50-50 chance we can go up here, we can go down there. But that 50-50 chance goes way highest probability. You close below 97, we're going here. 75% is just the tip of the iceberg. This thing is like 100% we get below that swing point. No guarantee, but it's extremely high. And we get above 102, the likelihood we're going to get sucked and pulled to that 105 to 107-ish level is very high. That's all in my humble opinion, but you'll see how this plays out. I wouldn't be surprised in the least. We close above 102, we go up here. We close below 97, we go down here. And I'll even throw it, we close below 99, we're going to make a move down here. And then we close below 97, continuation down to this bubble. So what are we going to do? Up to there and visit that, or we're going to break down to here. First sign of a breakdown is to get below this green box, which is the 618 of the prior low to the high. You do that, you have a 75% chance you go visit that extension. We close 97 to reach this red extension down here, that line. The probability we continue lower is extremely high. Got it? Only thing to the upside is we got to get above 102. So any type of bounce back toward this resistance line, I wouldn't take that as a sign we're breaking out. We really need to close above 102. Why? Because we already have a high, a low, a lower high, a lower low. We continue with this lower high, lower low, then that's continuation of a down move, right? Lower highs, lower lows is a down move, not an up move. So that's why this initial move up, this support zone is so important. If that is the three-wave correction and we break below that low, that screams lower low. So that ties in with you close below 97, we're going to visit this bubble. All righty, so as I was stating, what does that mean if the dollar does that? What does that mean for the euro dollar, pound dollar? Well, they're just kind of chopping. The dollar's holding around the magic fibbo, the euro rallied to the magic fibbo as the dollar dropped to the magic fibbo. What happens if we break above that A, B, C type of swing point? We're going to go higher high. So what's the equivalence of my 94, 92 zone would be the euro running up toward 121, 122. Makes sense. And if this is the ABC and we have a higher low, just like the dollar index had a lower high, once we start closing above that magic fibbo, we're testing. The next level to clear is this pink box. Why is that? From that swing point to this swing point low, that happens to be the 618786 zone. We get above that, the probability we go visit 19, 19, 18 up here is very high. Why is that important? That's the same as the dollar breaking down to that 97 target. What happens if the dollar closes below 97? What are we going to do? The dollar's going to drop down to 94, 93, 92. Well, what happens if the euro breaks above that zone and we reach this? Then we're going to go visit that 121, 122, and potentially have this 125 area coming into play. So where are those bubbles? The bubbles are similar I have on the dollar. The bubble would be up here for the euro dollar, and the lower bubble would be down here. Inverse relationship, guaranteed, no ifs, no buts. I guarantee, and there are no guarantees, right, Mr. Tucson, except with Justin Wilson and his cooking. I guarantee that we close and have the dollar go ripping down to that 94, 93, 92 zone. This euro dollar is going to go ripping up between that 121 and 125 zone. And as you remember a moment ago when I showed the COVID low, look at the euro. It's even more bullish because A, from that recent high to low, we took the 618 out, that 1280 1.128 zone. We took that out in 2025, saying we have a 75% chance at that point we're likely to go visit the 127.40, maybe 130, 131 zone. Then later, we actually closed and reconfirmed as we broke above and closed above with a candle body, even on a weekly chart. We reconfirmed the euro is likely to go to 127.45, 130 area. So this is why I'm a little bit more bullish than bearish. When is these targets viable? They're viable as long as we're above this green zone. We get below the green zone, then these targets up there are off the table. Put a big X on them. Terrible looking X. There we go. Put an X on it. So if this breaks down and we don't hold this green box, the likelihood we're going to go back up there is non-existent. And the likelihood we're going to go lower low is very high probability. And where would that target be? When the dollar goes up to 130 target that we're talking about, the euro is going to decline down to its 0.8, 0.7 zone, or maybe even lower. But this is when the dollar reaches 130, we're going to be down in here. So the plan was never 4 years ago when I said, hey, you might want to consider going long the euro dollar. As the dollar pulls back in a multi-year correction, the euro is going to climb in a multi-year correction. And we're up thousands of pips. And we still likely have more to go. So the same rule is I'm 1,000% confident on a 100% scale. The euro dollar is ultimately headed to 0.8, 0.7. The question is, do we need to get up to these extensions first to go lower low? Or do we break down now to go lower low? Or do we pop somewhere into that zone where we quite don't reach that, but we reach this 121, 125 zone and still go down here? All roads lead to us going down here. The question is, how high do we need to go before we reverse? And with the rule intact, that high, that low, we took the 618 out, confirming we were likely going there, 75%, and a 70+% we go to 130. Then we later close above that 786 zone over here, reconfirming we're going there. That's why I'm way more bullish for this to go breaking out higher than this thing to break down yet. But again, we're definitely coming down here. Got it? So this is a high probability we get up there, but once we're up there, where we're going? Down, right in that zone. So the swing point is this green box. We get below it, it's over, we're going lower low. While we're above it, we still have pressure to go higher high. So it's just the inverse of what we said for the dollar index. Pound dollar is basically in the same boat. It was even more aggressive. We not only a couple of years earlier than the euro, we closed above its recent high to low. We closed above that 618 zone way back in 23. That said, way back in 2023, the probability this baby keeps grinding toward this 147, 152 zone, is 75% likely we go to 147, 70% likely we go into 152. That's good odds, very good odds. And then later, as we chopped around, we actually closed and reconfirmed when we close above that 786. And right now, look where the 786 is, 133.70. We're at 135. We're back above that 786 zone, which again, reconfirm we're likely going to visit 147, 152. Do the math from 135 to 150, that's 1,500 more pips. I like it. 4 years ago, when I said you might want to consider going long the pound, when we're at this 103 area, we expected this is likely going to go what? Thousands of pips over the next multiple years. And we're up well over 3,000 pips, but you can't go, well, 3,000 pips, that's not so much. It's tens of thousands of pips when you start getting in and taking profits and getting in and adding your position and continuing to make multiple lots, multiple lots, multiple lots, multiple lots, multiple trades, multiple lots. And during that multiple thousands of pip move, this thing could run 5,000+ when it gets up there from that swing point low. But all those trades in and out and multiple lots, etc., that tallies tens of thousands of pips, not just the ultimate 5,000 pips that may make that move. I digress, but traders that trade Forex know what I'm talking about. When I get in, I make 50 pips on take profit 1. It goes to take profit 2, another 100, and another 200 there. That's not just a 300 pip move. It's the 50 plus the 150 plus the 150 again. That's well over 400 and whatever pips when you start adding it up based on how many lots, etc. Again, so what's the likelihood? As long as we're above this green box, the probability we go up here is much greater. Once we get below this green box, the probability we going down here is very high. And even with the pound, I'm 1,000% confident on 100% scale, the pound is going down there. But right now we have a higher percent chance we got to go up here first before we then go down there. So what is this target? That 0.9 to 0.8 zone is where the pound will ultimately go. When are we going to get there? When the dollar rips up to that 130 target, 130, 140, this thing's going to decline and come down here, that 0.9, 0.8. So this is the inevitable destination, but based on price action, the rules, etc., we're still more likely got to go higher highs first before we break down the lower lows. And the pound, as you look at and compress and compact the channels, we're in the same boat. Is this the ABC? What happens when the pound breaks and closes above that swing point? The probability we're going to go hunting at 134.90 / 140 and change up here becomes very high. Why? From the recent high to low, you close above the 618.786 zone. Where do you go? Right there. And that's not even the top. Remember, it's 147, 150 area up there, 52 area. But you get the point that we get above that swing point, the likelihood we go there. So we have targets here. Then on that bigger picture, we have the much bigger targets up here, onward and upwards. This is the big support zone. We stay above there. These are still viable. We get below this, it's over. We're going lower low. Fair enough? All right. So what if I want to just take a piece of this trade to the upside? The dollar starts breaking below 99, which means if the dollar breaks below 99, then this is going to go rallying above this swing point. So we close above that 136, which is not that far away. We close above that 136.50-ish, where that swing point is. Then the probability we're going to make about a 300-point run becomes very high. So the dollar goes breaking down toward 97. This is going to go making a move toward that 139, 140. What happens if the dollar then starts breaking down and starts heading toward that longer target, and we start breaking down below that 94, 93 zone? Then this is going to go breaking well above that, en route to that bigger picture we just discussed, 147, 152. So where's the dollar going to be when we get up here? The dollar is going to be somewhere near that, pushing toward that 87 target, as this will be pushing toward this target up here. Inverse relationship, right? All right. Be careful on the yen-based pairs. The yen is very weak, but the software, the technical picture said we needed a lower low. And now that we got it, how cool was that? We got the lower low, my friends. And it looks like, is this the end of that correction? We're going bullish to break out. I'd be very careful because we still have some zone we have to clear before all clear to go higher high. So is this bounce just going to fizzle and go lower low? This looks pretty impulsive down, although it could be of the bigger picture, all this sideways chop. We kept talking about it for weeks and weeks, as we got to push down. Went up here, we got a 500 pip trade right there in one day. We got well over 500 plus pips. This one went right to 1,000 pips after the big move down, and now we're bouncing. The key level to watch now is A, this magic Fibbo we're testing, and then B, I'm going to remove some of these lines for you so you can see what's important to watch. If this rally is going to grow some more legs and we're going to get a lot more price action to the upside, then we take the most current price action. That is that recent swing point over here. It was at a lower high. That's why I warned you of this price action. We needed a lower low. Now that we got the lower low, could this thing go breaking out to new highs? Absolutely, it could. When do I take this breakout to the upside serious? Well, you know it's coming. Use your extension right there, Fibonacci retracement. If you're using TradingView, there's a control key that acts as a magnet, so it puts it on the exact high or low, whatever candle you want to use. So notice when I run this and I place my candle up there, it'll put it on the exact high. You come down to the candle low, it'll put it on the exact low. And where is the danger zone? It's kind of already there, but we'll make it new to fit this exact move to the T. The magic Fibbo is resistance because we were below it, going back above in this zone. So we can actually stretch this down here to incorporate the magic Fibbo up to the 618,786 zone. So Mr. Tucson, is this rally going to grow legs? Or is this just simply a 618 type of retracement and then we fail and go lower low? Be careful. This thing could go way lower low if we stop in this this pink box, and we ultimately go lower low. What would my targets be if I'm bearish? In order to go bullish, what would my targets be on the bullish side? 188.64, 189.60, so 88, 89, 60 area. We got to get above this pink box. So we do that kind of like the 3-point move on the dollar. Well, this is euro yen, different currency pair, but we get a close above that, say 8,500, which would be above my 618. We have a 75% chance we're going to make a run toward 88. That's 300 points. 70% chance we go to 89. That would be 400 points or pips. That's high probability. But it's not now, even though it's a nice hardy bounce off the low, we're just reaching resistance zone. Let's see what it does. So if we do break above and close above 85, you might want to consider going long and shoot for 88, maybe 89. But if we can't close above that 85, which is still another 100 plus pips away, then what do we need to look for? We could get a turn down and go lower low. What happens if that occurs? Is I'm still in a position of authority on that move lower, and I took my profits 1 and 2, and I got still in it, and my stop loss is in profit. So if it goes any further, it'll just pip me out for more profit. Amen. So it's a winning trade and can't go a losing trade. But what are potentially some downside targets? What if this is the beginning and that's the first move down and this is the correction? And let's give it the benefit of the doubt. We go a little bit higher and we push toward this 618 zone and that 8,500, 8480, whatever. Then where are my targets to the downside if we get rejected? Minimum 176. More than likely this 4481272, which would be 7574. So do the math on that. From 184, we get rejected. We could have a 1,000-point run to the downside. And the reason I'm in a position of authority is because that market price anticipator software, monthly's overbought, weekly's overbought, daily was overbought until recently. That's what forced this move. And all we're doing is getting a move up on that daily time frame when the weekly is clearly still going down. Let me show you what that looks like on the software. Software does run in NinjaTrader as well. And check that out. Here's the weekly. And this is why I warned you weeks ago when price action was struggling, we were likely going to get a push lower as my weekly is starting to push lower. It's still not there. Money flow, and this has still got a ways to go before it gets oversold. This has still got a ways to go. And the daily is the one that was bouncing. So you can scalp with this program. You can, let me pull that back up. I lost connection. 1 second. I'll pull it back up and change time frame. When you lose connection, you change time frame, straighten it back out. There's the weekly. Here's the daily. But the daily is starting to move up against a weekly that's down. So Mr. Tucson, this could be setting up for our perfect slingshot lower. And this turns up, pushes lower in the direction of the weekly. So could we go breaking out and go to new highs? Yeah, you know what the target is. We close above that 185, the likelihood we go visit 188 becomes very high. What if we get rejected here and we slingshot lower? Then the target's down here toward that 175 area. So there you have it. And even the monthly, this is why we said be careful of this thing continuing to go higher. The monthly's overbought and starting to turn over. We got the weekly cycling down. We got a hook and a cross, not the steepest of slope. And remember the rule, whatever time frame gives you a hook, cross, steep slope, angle separation. What happened during that correction? When my monthly gave me a PAI hook and a trend momentum cross, we had steep slope, we had angle separation. This one, we have the hook, we got the cross, green is below red. We don't have steep slope angle separation yet. But what happened at this juncture when we look at this right there? What did that happen in the chart on that weekly time frame? Well, you know what happened. The weekly went from overbought to oversold. So you go to the weekly, and what happened during this period right here? The weekly went from overbought to oversold. See it? And it even slingshot a little bit in here till we finally got this final bounce off the magic Fibbo to then go to the next high. But when a monthly hooks and crosses, expect these deep retracements on a weekly. And basically that's where we are. And I suspect this green money flow still is going to continue lower. This will go lower. So if we stop and can't break above that 185, the likelihood we go lower low is very high probability. Got it? So this is why we go to the charting platform to make it a little bit simple. Well, Gary, do you have those Fibonacci's on the MetaTrader? We do, right? That's part. You go to the drawing tool, you go to MPA Fibonacci retracement, and we can use the same type of move. We have this high, we have this low, and there's your 1618 extension right around that. Basically why I'm saying 185, it's right there, 184, 187. We don't have to get above that automatically. I just need to get above 185, which is my 618 zone. Then we're likely going higher high to where? 192, 189, we talked about 188, 187, 189 area. So the Fibonacci's are in here. And even the extensions are in here. So let's do that. It's all included. So we go to a lower time frame like the hourly. Let's just do an hourly. And I don't have my data series. That's too little information. 5 days, yeah, that doesn't do much for us. 365 days, let's get more price action in there. And we have this initial move. So now I can fix this Fibonacci a little bit easier. Let me go to my drawing tools, take that out and place it where it needs to go over here. There's the high. Here's the low. And you can see clearly we need to get above this 618 zone in order to go extension hunting. So it's the same thing you see in this platform. We have it in NinjaTrader for you. All right, so in closing, don't be 100% sure we're going to these targets. Yes, we might. I'm in a short position because the monthly's still turning over, the weekly's still pushing down, the daily reversing, and I expected this to go test this retracement. That is typical. And that's why when you use the software, you automatically have target zones where you can scalp toward. And I would be taking profits on this bounce. Yes, it could continue, but if we can't close above this, what's the likelihood? This would be the first move down, correction into the zone, next move down. So it's sitting pretty for another big move down. And the software right now has the daily going up, but a weekly and a monthly down. Higher probability we're going to go lower low, then we're going to go higher high. And what's the tipping point? We got to get above that 185 area, close above, then it tips the scale to go 75%. We're going to go visit 188, 70%. We go visit 189. But as long as we're below that and tips, we're going lower low. What technique can you use, Mr. Tucson, to give me, just because it kind of fizzles out here and starts to retrace a little bit, how do I know it's going lower low? Well, you do the inverse of that. So we'll go to a 4 hour just so we have a little bit more space in here. Then you can use the same type of thing, use your Fibonacci retracement the other way. You go from the low up to the high, and let's say we go test that 184 and change. Make a move toward that 618 zone, and then what happens? Well, if we start breaking back below this 181, basically that swing point, notice how that fits. We fail to break above 185 to go higher. We start turning over to go lower low, and we take out this 181 area. Then that sets the tone. We're going to 178, 177 en route to those other extensions, 176, 175. That's it. So we can break it down in incremental pieces. So force price to prove it. I dare you. You close above 185, then a high probability trade is to go long. We start breaking back below this 181 change right there, that swing point. The probability we go several hundred points lower is very high probability. So which one's going to play out? Just like we talked about the dollar, we get above 102, then likely we're going to go to 104, 105, 107 level is very high. Or if we break below that 97, the likelihood we go to 94, 93, 92 zone is very high. Well, we can do it on any pair, any stock option, anywhere you look on the underlying anyway, on a chart. Start compressing and compacting the channels. Do your retracement zones, do your magic fibbo, and et cetera is in here. But look, we're below the magic fibbo on a 4 hour. That's bearish for the moment. My daily still pointing down with just turning up with my weekly and monthly down on the software. This is likely going to go lower low. If you want a high probability, once it closes below 181, you still have several hundred points, which would be extremely high probability trade to short this thing down. I was already short took profits, and now I'm letting it run. So if it does go breaking out, I get pipped out for more profit. What if it turns down? I'm still in the trade. Then as we start going back short and we break below that 181, I can add short lots to shoot for 78, 77, 76, 75, and I'll put my take profits down in that zone. So is it a high probability we're going breaking out right now? No. Even though the daily's turning up, the weekly and the monthly are still down. And all we've done is rallied into this zone. So it's going to be critical. Well, some would say, well, Gary, look at that price action. This looks kind of bullish. That's a 1, 2, 3, 4. We didn't go into area wave 1, and that's a 5. Well, okay, good. That could be. It's possible we could go breaking out. The next thing is we're going to get a correction. The correction, if it breaks below this 181 swing point down here and change right there, then the likelihood we go lower low is very high. If this correction turns out to be a little three-wave correction and we stay above that 181, 181.50 area, and then bounce and break a new high, then we're set to go to those extensions on the upside. So this is how you use price action to your advantage along with the software. And of course, in our class, we kind of give you those make or break levels. That's what we're here for. So do we go up? We close above 185. The likelihood we go up here is very high. Are we going to go down? We start closing below 181. The likelihood we go lower low is very high. In the interim, can we chop? Yeah, and I'll throw in a little extra something extra, a little Louisiana lagniappe. The likelihood this thing goes breaking out right now is low. The likelihood we go retrace is high, because even if this is that 5-wave move up, right, if that's what that is, we need a 3-wave correction coming back down. And from the low up to the current high, we need to watch that 618 retracement low. We get a little 3-wave correction, it holds off of that, we go bouncing up above 185 or break a new high, game on. See how even without the current price action showing that now, that's why this 185 closure above says we're likely going there. And likely we close below this swing point down here, that 181, we're likely going lower low is very high. And in the interim, we could just chop and slop, but we're more likely going to start correcting. Why? Well, my daily's been pushing higher. We can do it over here, or we can do it in MetaTrader. I think I have one in here somewhere. I have my euro-yen pair open. Yep, still up 166 pips on that. Took profits, so we're good. But let me go over to another one so I don't mess up my trade. Let's come over here and show you the software. That's the dollar yen. Where's my euro yen? All right, I'll throw the euro yen on here. Why not? Just open up another one. So there's that. Come over here and add our software to the mix. And look, lo and behold, yes, the daily's reversing, but again, like I was showing you, Mr. Tucson, the weekly's headed down, the monthly's turning over, so that's not conducive to going breaking out. And my 4-hour is the reason I said we're going to start turning back over. The 4 hours already made it back to overbought, so we're likely going to see this thing start to push lower. Hint, hint, hint. And do we get a little 3-wave correction followed by a breakout? Or does this thing cycle down and break that swing point low to set the tone to go lower low? But that's how you use the software and the triggers and this to tell you, yeah, if you took this bounce, you better be taking profits because this thing could end and we go lower low. All right? All righty. Same thing with the pound yen. It's rallying back up. We had a nice push lower. We still got to get above this resistance zone before we start taking it seriously. So in order to take the pound yen bounce seriously, we got to get above 216 up here. There's my zone 216, 217 off the recent move. Why is that important? Because we're in the original zone that was off the prior move. And this has been our resistance zone for quite some time. Former resistance turned support. Now we're back to resistance. So we can up the ante and push this toward the new move. So this is current, right? We have the recent high to the recent low, and this is a retracement toward this resistance zone. And what are we stopping in right now? That's on a 4-hour. That's the 4-hour magic fibbo is blocking us right now as far as resistance. Go to the daily chart, which I can stretch that out a little bit more. And this is why this zone is very important for us to break. Everybody good? So in order for us to start fantasizing, ooh, look at the pound yen. We're going to go up here to 221, 222. I like it. We got to get above this pink box. We close above 217, then I'm all for it. But this initial move lower looks very impulsive. Remember all this chop and slop over here? And I kept saying, look out, we need a lower low in order to clean the chart up. Well, this lower low might only be the initial move down. Correction, still come lower low, right? So we still got this lower low. Part of the chop is still in there. We got that one just a little bit lower, part of that chop. And notice if we use the high, low, and lower high, where that extensions are going to line up. Quite interesting. So let me stretch this way out. Stretch it out that way, bring it in the view. So, Mr. Tucson, if we can't get above this pink box, the likelihood we're going to go extension hunting is very low. This chop and grind, was this lower low enough to go breaking out? Potentially. But what if we get this rally to stop in this zone and we go lower low? Then you use your 3.2. We have this high. We have this low. We have this lower high. Let's give the benefit of the doubt. It makes a move toward that 215, which we're kind of there, just a few more pips. But we come up there and look where the lower low is. Right at what I was just showing you a moment ago. We got this swing point low, and then we have that swing point low. So we're getting toward equality here. And then we got this prior battle zone where we rallied to retrace in a what? 3-wave correction to then go breaking out. And look at that battle zone right at those extensions. Huh. So, Mr. Tucson, what happens if we go plummeting down here to test this bigger breakout? This is definitely an area I'd be taking profits because rest assured, Mr. Tucson, we get down here, which is about 1,000, 1,100 pips to get to that 205, 204 area. Let's just say we got down there and price just plummeted like that to give me an equality move where this is the bigger A, this is the B, and this is the C. To correct all that mess, we get a lower low to set up the original run up, bigger correction to set the tone for another run. It's over 1,000 plus pips to get down there. Huh. What would I do if we get down there? I'm going to go long. Doesn't mean we're definitely going to go breaking out, but even if we just get a 618 retracement, so let's throw another one on it. That high, we come down to this low. Let's just split the difference between the quality move at 205 and the extension at 203. We do this 204. That's where we broke out from, right? The prior resistance turned support. Right there, resistance turned support. And we come back and retest that zone. What if we just do a 618 retracement out of that? Look at the pippage there. 213. Right there, 213. So from that high to this low, 213 would be a 618 retracement off of that move. And from 205, 204 to 213, 900 to 1,000 roughly pips. So yeah, what happens when I get down here? I'm going to take the daylights out of all my profits I'm already in, And then when it bounces, I'm going to go long off of that bounce and look for it to do some sort of retracement, at least toward the magic Fibbo, which should be hundreds of pips. If we break above that zone, then we got hundreds more to go. If we don't, and this ends up being like a 5-wave down, 1, 2, 3, 4, 5, and then we get a 3-wave correction, that could set up even a bigger move lower. But during these retracements, on this pair, that's a lot of pippage. A lot of pippage. All righty, enough of that. Let's move on to the markets. What about the markets? Be careful. Kind of flirting with all-time highs again up here. We were able to hold that lower low. We did go up and touch that extension. I warned you last week, I'm not real bullish for this continuation. And the more we chop and grind in here, the probability we still need a bigger pullback is greater. And I'm not convinced that even though we made this higher high, that means we're returning to full-blown bull. This still could possibly be the initial A. All of that is the B, and we still got to come lower low to get that C to play out. Right? How do I know? Well, there's levels in here that are going to dictate. Right? Just like when we had this retracement and we kept talking about this, all this overlapping and chopping, the lower high scenario, that we needed the NASDAQ to make a lower low, and even the ES or S&P 500 would look better with a lower low. So be careful. This thing could still give us the lower low we need before we set up to go breaking out even higher. Any questions? So I am not real bullish at this point. Why? Because from the recent high to low, we took the 618 out and we gave you those targets, 76, 77, maybe get a little feisty to 78. But now that we reach the extensions, we really need, at least, typically speaking, return back to where we broke out from. That would bring us down about the 7630 area. So roughly 100 points. For us to get a retest of the breakout, we don't hold that, then we have, as you well know, we'll run some more lines on here. So you run another one. Here's the low. There's the high. So in order for this breakdown to take full-fledged, this pink box, we need to break below it. So if we don't hold, Mr. Tucson say we start declining, and we don't hold the prior breakout zone right around there, what happens? We close below that, we're coming here, test that 618 zone. No question, we're going to test it if we break below that prior zone. Any questions? And what happens if we close below this? Let me see what that number is. Basically 7,500. We close below 7,500, it tips the scale, we're going lower low. Right? What are the extensions down here right around the magic Fibbo? 7249, 7186. Magic Fibbo sitting right there. So what is that, Gary? We decline down below 7,500. The likelihood we go visiting the 72 area is very high. What about in the interim? Well, that's where scalpers come in, right? Scalper babies. Now, this move, the prior move up on this lower time frame, as we look at that move, and we see this kind of chop and grind, why is this a problem? Well, we're at lower highs. Sound familiar? And what about that retracement? We stopped in the danger zone. What does that mean? 618786 zone. So if you stretch that way up, you run another extension. That's why I do it on a charting platform. Where do we stop? Right in the danger zone, people. This is telling me we're likely going lower low. What's the telltale sign on ES that we're going to go lower low? All we got to do is break below this 7760 area, I believe that is. Let me get my number there for you. Crosshair. That swing point low. Yeah, 7760. Say 7760. We close below and we're not far from it. we close below 77.60 scalpers, the likelihood we're going to go visiting a lower low becomes high probability. Now we're talking another 40 plus points. And that's scalping, right? People die and go to heaven with a point or two. This is a high probability we close below that swing point of 77.60. Then the likelihood we go about 40 points lower to make a new low and visit this 1 hour magic fibbo becomes very high. The bigger picture is, that's on the daily. That bigger picture comes in, and I'll stretch that back out. What if we get down to that visit we were just talking about and we don't hold this support zone? Look at those numbers, 76, 75 and change. So we start closing and that decline continues to extend and we go visiting this extension down here and we don't hold and we close below 7,500, then it opens the door to several hundred more points. See, compress and compact the channel. Do that across any asset class, anything you throw on a chart. So on the 1 hour, continue with this, we close below this initial move up in this correction. We close below 77.60. The likelihood we're going to go visiting this 1 hour magic fibbo becomes very high. Nice little 40 pointer, roughly, in the ballpark. Not too bad. Amen. What if we don't hold that? Then we're going to go testing this support zone. Remember the bigger support zone? That's another 100 points or so. We don't hold that, then we got a few hundred more points to go down to this extension down here where my daily magic fibbo is visiting. And why did I start off with the daily picture? I like big picture first before drilling down. And if this is part of that initial run up and this is still corrective and overlapping, even though it made a higher high, this can still be the A, B, C. Bigger correction. Got it? That would fit this a lot better. The ES would look a lot better if we could make a lower low. Amen? So how do we do it? We take it one bite at a time. How do piranhas eat an elephant? One bite at a time, right? So how do we trade? One trade at a time. And you use the different critical make or break levels. And first things first, could this thing hold here and go breaking out? Sure. Won't say it can't, but the software is setting more in tune of going lower low. Go back over here to the software. And here's S&P 500. And we have the daily, as you would expect, pushing up and now reaching overbought. We're at a resistance zone. We got a daily overbought. Our weekly prior to this was already in overbought territory. It too kind of just got that last little push, but it's back in overbought. And I'm not typically one, Mr. Tucson and others, to go all in, load the boat long because we're going higher when a daily and a weekly are extremely overbought. Monthly's even in overbought territory. So this is why I'm not gung-ho on going long right now. We need depressurization. When my weekly hooked, this is a monthly, excuse me, that's the monthly. But when that monthly hooked and crossed there, we had a hook and cross. What is the hook and cross phenomenon? Trading strategy? PAI hook, trend momentum cross equals monthly hook and a cross equals what? Weekly cycle down. What happened during that big correction? Weekly cycle down. Can't make this stuff up, even on that one. I think it was probably this one, and we did it again there. Weekly cycle down. So this is why, even for us to go higher, we really need another correction. And when you start zooming in on current price action, start zooming in on current price action, this right now is not real conducive to breaking out. What if we do? Then we got 78, 78.30, 78.44. We get a little feisty, 78.76. But we got to get above this zone. We got to go breaking above. So stretch this out so we can see what we're looking at. Here's your compressing compacted channels. Hey, where do I think we're going? We close above the 7,800. We're probably going to make a run for about 30 points higher, maybe 40 points higher. If we close below that 77, what did we say that was? 76.50? What did we say that was? Low 70, I guess it's 7,700, 77.60. That's what it was. 77.60. So Mr. Tucson, we get below 77.60 and we close below it, we're likely going to go visit here. We close above 7,800, we're likely going to go visiting there. So I could put a bubble here, I could put a bubble there and say, which one are we going to do? Well, my monthly's overbought, my weekly's overbought, my daily's overbought. Well, let's check the lower time frames and see what that says and why we're considering a little bit more of a correction. 4 hours starting to turn over. Uh-oh, looky, looky. We have divergence. We got lower highs with an engaged slingshot that failed. So what do we know about engaged slingshots that fail like this when you have this lower high, and we engage, disengage? The likelihood we're going to go lower low is very high. So even the software, not only the technical picture, but the software saying we need to go lower low. Not too bad. So what can you do here? Short this thing. Click ready to trade. Sell it. But I don't have my things too close. Oh, I should have checked my levels first. Let's see if I can nab them in here before this thing ticks. Move my take profits down. Come on. I should have checked, always checked. So I just got carried away seeing this setup. And then the stop loss, we need to move that up and out of the way. Come on, come up over here above the high and get this thing likely is going to go where? Let me make sure I grab the right ones. So my take profit 3 should be the lower number. That's good. My take profit 2, let's make sure it moves lower. Yes, and this is take profit 1, which should take us at least to this low and a lower low. So now we can just let this baby run a minute and see what happens. Is it going to reach my take profit 1 today? Could certainly. We got several more hours in this session. Is this likely going to go breaking down? Yeah, according to this engage, disengage, daily overbought, weekly overbought, monthly overbought, 4 hour, showing lower high, engage, disengage. All signs read to scalp lower, and we're likely going to see something play out. How about that for some in-depth review? And we hadn't officially closed below my 77.60 yet. I got a little excited. Went in and took the trade when I saw that on the 4 hour. We'll see how that plays out. Worst case scenario, you got a stop loss, you get a little loss. Best case scenario, it plays out, you make numerous points. Fair enough? All right. What about the NASDAQ? NASDAQ's kind of in the same boat. But NASDAQ in the bigger picture is still in the danger zone. Right? Prior high, prior low, we're in the danger zone, 618786. This one's saying at the bigger picture, hey, are we going to go breaking out to go higher high, or are we going to fail and go lower low? Everybody see it? This is danger zone. So I'm leaning more bearish than bullish at the moment. And that's just off the 1 hour, the high, the low, retrace to the 618 zone. Well, what does that software look like? Come over here into the NASDAQ. And we're kind of in the same boat here. Here's my daily getting overbought. Weekly overbought. Well, still in overbought territory. And what happens if this baby does like we saw in that 4 hour time frame for the ES? That red hook's down, blue hook's down, green hook's down, and this slingshot up fails and disengages. Then we have that initial move down, this retrace, it failed. Then we should go lower low. It's sucked and pulled in the cloud, and that continues with a bigger move lower. Right? So far, so good. This is on a higher scale. That's the weekly engage, disengage. Well, is it likely to disengage? Yeah, look at the monthly. The monthly's hooking down, starting to cross. Again, we don't have steep slope angle separation yet, especially like that one. We don't have steep slope angle separation, or even this one, steep slope angle separation, but we're working on it. And what happens when you get one of these monthly hooks and crosses, steep slope angle separation? Weekly cycle down. Why is that important? Because I can use that even when I'm trading options. A weekly takes about 2 to 5 months to cycle. 2 to 5 months to cycle. And when you get that monthly hook and across, the likelihood it's going to do that is very high. And we're right at the cusp of this. So if this baby does disengage, then the likelihood we're going to go lower low becomes extremely high probability. So far, so good. And then you come over here to the 4 hour, and we're back in overbought territory, turning over. And looky, Mr. Tucson, we kind of got the same thing. A little lower high there, lower high here, lower high there. We got engage, disengage of the slingshot. That's looking good. Likely we're probably going to go down at this low and make a new low as that baby cycles down in the direction of the others being overbought, including my daily returning back toward overbought territory. So there you have it. Can we scalp this thing to the downside as well, like we did ES? Yeah. No buy, sell to hold recommendations. This is just price action. And this grinding and chopping retrace right to the 618 zone, right to it. And it's failing. So be careful. We close above, then it's a different story. We could look to go higher. We start breaking down, which is more likely, then it could set the tone for a much bigger correction. And right now, that engage, disengage suggests we're probably going to grind our way down in the coming days, lower low. Fair enough? Voice changes if we get above 32,300. Kind of breaks above that, 32.3, 32.2. Then we can start talking 31.5, 32,000. But that's 32.2. 30,200, we break above this pink box, then this becomes a high probability outcome. In the interim, while we only retrace to a resistance zone, and the software on the higher time frames is still overbought, likely lower low. Another reason I'm anxious about this move up is the Nikkei. We use the Nikkei as our global liquidity proxy. And we hadn't even reached the 618,786 zone. But looks very much more impulsive, and this looks more corrective because there's a lot more overlapping in here. But this is a typical first move down correction. So we got A, B, C, and a 1, 2, 3, 4, 5. So we're getting awfully close to this thing terminating and getting a correction, to say the least. But we're below this zone. So that bigger run up, so I'll go out to my daily to show you more time frame action and more price action. That big run up, this correction down does not look 3-wave complete. It looks more 5-wave. So let me stretch that out, zoom that in, and show you what I'm talking about. Now we had the big run up, and this definitely looks more 5-wave-ish than 3-wave-ish. So if this is 5, then this should be the beginning of the A wave. This is the B wave, and we still need a C wave. Amen? And where's the likely place we would go and visit? 54,000 down to 50,000, somewhere in this bubble. So be careful. What if, William Bruce, we actually get this global liquidity to make a trip down here in this zone? What is it going to do to ES? There's a 98% correlation between global liquidity and the S&P 500. Nikkei is not global liquidity. I use it as a proxy. So if this baby is going to decline, what is our markets going to do? They're going to decline, right? Pretty simple. What happened when we got our pullbacks a few weeks back in June, July, coming in down here until almost late July before we bounced? We got the correction. What did ES do? Same time frame. We got the correction. What did NASDAQ do? We got the correction, right? Correlation. So this does look suspicious, to say the least. Of this bounce, we get above this pink box, then sure, all-time highs, and we go to 75, 77. But this looks like fizzle manizzle, and you come over here for this one to the Nikkei. And we got the same problem here, Mr. Tucson, meaning we got a monthly hook and a cross, we got a little slope, we got some angle separation, and the monthly is pushing lower. My weekly is cycling down, and look at what it's doing. It's trying to engage up, but it hadn't finished the cycle. What do we know when a monthly hooks and crosses and you show slope, angle separation? The probability of weekly cycles is very high. So far, so good. So this engage up is very much likely going to disengage and head lower so the weekly can finish the cycle. We hadn't done it yet. Red's hooked up, blue's flat, green's hooked up. So it hasn't done it yet, but I'm anticipating. You know, you always hear everyone else. I predict this. My predictions predicts. From the weatherman to my gardener, talking about when the roses are going to bloom and this, that, and the other, and azaleas and blah, blah, blah. So Chauncey the gardener is saying it's going to bloom here, and he's predicting. And I tease him all the time. I said, everybody predicts. You need to anticipate. That's why I named my software the Market Price Anticipator, because it anticipates. I digress, but I think you get the point. So I'm going to show you what I believe is going to happen in advance. This is going to turn over and start to head lower. This one that's flat is going to turn down and start to head lower. And this one that turns up is going to turn over and head lower. And it's ultimately going to continue the cycle down. Now, I do have make or break levels up here, right, Ian? We get above it, then we're likely going higher high. But for now, weekly, monthly turning over, weekly doing this, and we're running into resistance after an impulsive move down, after that big run up. We're due for a three-wave correction at least. And that's what I think is going to transpire. So look for this to start turning and hooking down. When it does, what does that mean? That means more than likely we have to make a new low below that low. So if we're going to make a new low below the low, where's a good target? The extension. So you know what's coming. Come over here to charting platform. I believe I already have it on there. But you have the high, you have the low, you have the lower high. What if we start breaking down where we're going to go? Here's your target. Got it? So how do I know that this rally up is truly given up? Because this thing will just keep grinding, it closes above here, then yeah, we would go for higher high. But while we're grinding right now, we start pulling back. Where's the threshold to set the tone that this is not only a pullback, but it's more of a continuation? You know it's coming. Stretch it out, go to 2.2. You go from the low, you go up to the current high, whether it goes a little higher or this is already the high and we're all ready to start this. Then what happens if this rallies a little bit more to this zone and that's the lower high? Then I pull that up there. But for now, the critical make or break level from that initial move up is this 63,170 area. So if we start retracing and we close below 63,000, say 150, because of that wick right there, we close below that, then it gives me a 75% chance we're going to visit 59, 58 zone. We don't hold the magic fibbo, we start reaching the extension, the probability we're going to visit these extensions down here on that bigger move starts becoming high, that 54, 51 area, 52, 51 area. So hit this bubble. So Mr. Tucson, A, we close below 63, 150, 175 area. That sets the tone. We're going lower low. We don't hold that. We're going down here. And that looks more impulsive. This looks corrective. So we really need that. Amen. And all I can say is, what if we and Bruce, we come down here and we drop in the neighborhood of 10,000 points or more? No way ES is going breaking out. No way NASDAQ is going breaking out. The global liquidity is going to pull them down should the Nikkei do it. So that's why I watch the Nikkei as my global liquidity proxy. And if this is, that's why the low to the high 618 zone is very important, because this could potentially be a 5-wave up, a little 3-wave correction. We hold, we bounce, we break the high, then it's back to this. Bottom line, I see today, tomorrow, next week, hey, S&P just closed above the 70,000, 71,000, well, 70,900 zone right there. 70,700 right there. Sorry, I was looking at the wrong level. We close above that, basically 70,000, 68.50, 68.5, and 70,000. So we close above 69,000. Split the difference. We close above that with that swing point right there, then we're likely going higher high. But this looks impulsive. This still looks more corrective at the moment. So prove it to me. Close above this, I go long. Break down below here, we go short. In the interim, we can scalp, but right now I would be more in tune looking for a downside move than an upside move, because even as you go to the lower time frames, my 1 hour is back in overbought territory. My 4 hour back in overbought territory. My daily, not quite there, so this could maybe grind a little bit more, possibly, but we also could easily just start slingshotting lower, because the weekly is headed down and the monthly is down. So I take the big picture, monthly hooking across, my weekly heading cycle, so I'm expecting it to cycle. When is the weekly that's trying to engage up here going to likely disengage? When the daily starts reversing. What does that mean? Well, A, it could do one of two things. The daily could continue and we grind a little further and start testing that 618786 zone up there, and we finish the cycle, then we do it. Or we start slingshotting over and this turns down, that turns down, and we still do it. So be careful where we are. Could we possibly grind a little higher? Yeah. Am I looking for a breakout? Probably not. This looks impulsive. This still needs another push lower. So I'm going with the bigger picture, that I won't say this can't possibly grind a little bit more, because the daily still got a little something in the tank, but the weekly's turning over, the monthly's overturning as well toward the downside. So the probability that we go up like this and start slingshotting higher and higher and higher is much lower probability, especially as long as we're below that 69 plus up there. We still need to get above that before we look for higher high. Otherwise, we expect this to turn down and the daily cycle back down. Got it? All right. So that's the big picture on the markets. And last but not least is Mr. Russell Russell still looks like it's chopping and grinding, and it really wants to go visit 3,100. Could we possibly get that last little push in the global liquidity to get us to push toward 31, say 3090, 3,100 up here, and then we get the pullback? Yeah, it's possible. We've been holding the breakout zone. We were looking for this to break down, but it never did. Kind of came back to where we broke out from, retested. Now we're back above, still holding. So, ladies and gentlemen, I would not be shocked to see this push toward 31, then give us the bigger correction. Is it a guarantee? No, because again, we're still at lower highs. We break low, we're likely going lower low, but we may need that last little push to finish this equation. How do I know this little temporary consolidation is not a reversal to make a lower low? Well, you know what you do. Harold, you take the low, you go up to the current high, and you say, if this thing starts to decline and we start closing below this pink box right here, and I'll make it pink in just a second. Symbol search, I don't want symbol search. I want to get my pink box, green box into pink. There we go. All righty, ladies and gentlemen. So if we're not going to go popping, which is still likely because we've been holding this and now we're back above, and what other reason do we have? Anybody seeing this chart already? Well, if we get this to start declining and we break below this, the likelihood we're going to go lower low looks good, and get sucked and pulled toward the magic fibbo looks great. But at the moment, why am I more bullish? Because check that out. From the recent high to the low, we took the 618786 and we're right in that zone, but we closed above it. So, Mr. Tucson, we have, actually this would be support, so I should have left it like it was. Let me change that. This goes back to green because on the way down, this would act as support. We break support, we go lower low. But on this recent bounce, we actually took that out. So that's why I keep saying 3090, maybe 3100. We're going to go test that. What would I do if I scalp this up here and it reaches this target? Close the trade, get out. Because the likelihood, if we do get up here, which is likely, the likelihood we're going to reverse after that is very high. Amen. So notice on all these pairs and whatever we're looking at, we start compressing and compacting channels. The main compression compacting channels tool is a 618786 retracement zone. It also acts with extensions of where my target zones are. So you break this, we're likely going there. Once we get there, we're likely going to correct down as the software is setting up for a move down lower as well. So yeah, I wouldn't be surprised to see that pop up there and then reverse. What if this thing doesn't pop up there and it starts breaking below this green box? Then this is a good short from below this level to this extension, basically the magic fibbo that's sloping here. My first target would be 2880, 2860, followed by 2808 zone. But we got to get below this 29. Let me get my crosshair on there. Got to take all that off. Crosshair, once we get below 2950, 2950 should be enough. We close below 2950, the likelihood we're going to go to 2880, 2860. So about 100 points is very high. Could extend, you betcha. What if we do, which is more probable right now because we broke that zone, then we're likely going up here. So this is where that resistance zone was, and we did close above it. So that's why I'm more bullish at the moment for a short-term little grind higher. Do we have to go breaking out? No. So that's why I'm more bullish now, but if we start faltering and get below this green box, I'm no longer bullish for these targets, I'm bearish for these targets. All right, let's continue. What about black gold Texas tea? We're in the absolute danger zone. In order to take this first move up correction, we stopped in the 618 bounce and we're back above the magic fibbo. But until we clear this pink box, it kind of sets the tone. We would go higher high. And remember my comments from weeks ago that based on this pull back, if we had a run up into the mid to high 80s, mid 90s, then we'll retrace back to the magic fibbo and bounced and made a new high. That sets the tone for 150, right? Amen. Well, we actually went deeper, but that's okay because it ended up being from the low to the high, that 618786 zone, and we bounced. So far, this could still turn into an absolute disaster in gas prices zooming much higher, and this baby breaking out 125, 130, 150 very easily, right? Any questions on that? So if you take from, let me move these trend lines at the moment, and we'll put in a fresh move. So we take the high to the low. You can see where the 618 is up here around 99 area, 99.50. So Mr. Tucson, if this is the initial move up correction and we go breaking out and we start closing above 99, then it's likely we're going where? 125, 130, 150. That's why I keep telling you, if we got this correction and bounced and we broke a new high, the likelihood we can go visit 150 is very high. That's it, my friends. There you go. There it is on the chart. Now, what if we falter here and we break back below support zone? Then we're going lower low. So it's all in crucial. Is a deal, no deal, yes deal, no deal. If it's no deal, we're going to go ripping. If it's a deal, we'll go dropping. And what's going to happen? The technical picture is we're stuck between resistance and support. I would at best be scalping and taking aggressive profits. Be in a position of authority. We get above this, then likelihood we go on higher high is very high. We go higher high than that. Onward and upwards, we should make a move toward 125, 130 / 150. Got it? So what are you telling me? We break that high, not just a wick up here, but we actually close above 95, then it sets the tone. We're making a run toward 125, 130, 150. But if this baby fizzle manizzles and starts breaking below support here, the likelihood we go lower low is very high. So which one's it going to be, my friends? Which one? Which bubble are we going to visit? It's kind of an obnoxious bubble. Let me tone that baby down a little bit. So this 125 to 150 zone. Which one do we do? Do we break support to go down here? Do we break resistance to go up there? Compress and compact the channels, my friend. That's what we're doing. Highest probability we start closing above that 95 up there. Then the likelihood we go in there is very high. Likelihood we start closing, well, certainly when we break that low, we're going to go lower low. But just this support zone likely says we're going lower low. All right. So compress and compact those channels. We close below 80, we're going lower low. Is it 80? Let me make sure I got that number right. That low 70, sorry, 74. So let's say 72, below this zone, right around 72. So let me do that again. We got to close below 72, is about 10 bucks lower. We're going lower low. We got to close about 12 bucks higher. We're going that bubble. Amen. And while we're in between, be aggressively taking profits because this thing could fade very easily, or it could grind a little bit more. And while we're in the midst of deal or no deal, we go this way. We get a deal, we go that way. And technical picture is a coin toss. Which way is it going to go? Big question mark. All I know is we get above here, we're going long. We get below there, we're going short. And in the interim, we can scalp. And what do we use? We use the software just to do the swings for scalping purposes. Yes, it works on black gold, Texas tea, the Beverly Hillbillies as well. My daily's kind of engaged, disengaging. My weekly is kind of doing the same, engage, disengage. Went from a slingshot up to a slingshot down. Is it going to disengage? Well, Mr. Tucson, the same rule applies to this one. If the red hooks up, green hook, money flow hooks up, and blue hooks up, the only AI you need is price AI. That's the only one you need. So that's the AI of interest. So if we end up hooking back up, then we're going to go back to that high and make a new high. And that's right at the threshold. If we were to do that, then we start swinging the pendulum. We're going up to 150, 125, 130, 150. Got it? All righty. But you can see why the higher time frames are kind of exhausted. Could we disengage and go to 150 here? We didn't finish the cycle. Sure. This thing could turn up and go rip into 150. We know what the make or break levels are, and the software would follow suit. What if the software does that, William Bruce? This goes up there, that goes up there. We're going to 150, 125, 130, 150. What if this continues to push lower? We're going lower low. Not the 12 over here, this lower low over here. Sorry, that lower low. And then we just cycle down. Amen? So the make or break levels are where we are. We're compressed and compacted channels, and we got what we need. Fair enough? All righty, but what's going to happen? Look at the lower time frames. We're overbought. So that's why this prior swing point is important at the moment. Do we turn over the slingshot because my 4 hours turning over and my daily's kind of engaged, disengaged? We're kind of stuck in a coin toss. If we break the high, we're going higher. We break the low, we're going lower, and we're stuck between support and resistance. It's pretty clear, isn't it? That's why it's a coin toss. So again, we close above this, we go long, shoot for 96.99, maybe 105. By getting up here, kind of sets the tone, continuation to go there. And if we break support, the likelihood we're going to go to this 63.60 zone is very high. We sort of don't hold there. We're going lower low. So it sets the tone. We take that out, we go lower. We take this out, we go higher. Pretty simple. Amen? All righty. What about gold? There's gold in them there heels. Be very, very cautious on this run. Still looks three-wavish. Here's a critical level for gold. Let's compress and compact those channels. Could this latest low over here, let's move up, higher low, and this beginning move be part of a breakout? Yes. That could have, and I say could have been the low. And if this is the beginning of this latest move, 1, 2, 3, you know what's coming. If that's the one, because it looks bullish, right? And it looks like it's moving. That's the one. That was the 2. This is the 3. It went proportion-wise, it went nice enough to be a 1, 2, 3, right, Mr. Tucson? We always talk about it. Was it ABC? Well, proportionate, we went at least a 161 and above, so that's looking more like a 1, 2, 3. So you know it's coming. The critical juncture is going to be, and I'm going to remove all this, if we stay above that swing point. It's critical that upon our retracement, we stay above that. Because this is 1, 2, 3, and we're going for correction. 4 should not come into the area of wave 1. So I'm going to put a permanent line on there, not with just my charting, but put a permanent line on here. If we start declining and we close below in this area, below this blue line, then it sets the tone because of the overlap. 1, 2, 3, overlapping 4 and 1 sets the tone. We're likely going to go lower low. Right? So here's my majors level to watch. If this retracement turns out to be 3 waves and we stop at this line or above and then break the new high, that sets the tone that this is more than likely the bottom and beginning reversal. Any questions? And so, well, Gary, well, this is the low. What about that initial move up and this overlap? Well, this could have possibly be the 1, 2, 1, 2, 3. That's why it's very important we hold above this 4160 area, 4165. Very important. Amen. Now, be careful. I do expect a correction. Hint, hint, hint. We are expecting a correction after that run up. We need some sort of correction. And if this is the 1, 2, 3, and we come down in 4, it's imperative we hold that 4165. Everybody with me? What happens if we get down to 4160, 4150, something like that, pushing toward 4100? Then with that overlap yet again, it then changes the picture from bullish breakout to overlapping chopping. We still would need a new lower low. Any questions? I can't say this is definitely the bottom until we get the rest of this price action. 3-wave correction holds this purple line or above, then goes breaking out. Done. I'd say very much so that's the end and that's the low. When we got those lower lows, I told you it's time to nibble. Be in it because this thing could certainly go reversing. But if you think this is definitely the breakout without fail, this needs to hold. Amen? It doesn't, then we're still likely going lower low. What if I bought down here and I'm feeling really good about what I did? And then we close below here and we go lower low. Smile and go thank you and add to your position, because the lower we go, the higher it has to go to get to our target of 7 to 10,000 up there. Amen? And be careful as well, because not only after the run, but guess what the software is telling you? Overbought territory after that run. So my 4 hours getting overbought, my daily's overbought, starting to turn, right? Overbought. So this is why I'm very cautious, and I anticipate everything but predict that if that is my 1, 2, 3 proportions fit, Ian, we just can't come back into that 4160 area. We must hold above it. And what can happen? This thing can turn over to slingshot higher, and we get our little 3-wave correction in there, and we hold above that level, and we go breaking out, and this thing just starts slingshotting higher and higher in the direction of the weekly that is up, and even the monthly is toward oversold territory, even though it's still down right now, starting to push lower. So this is why it's still a cautionary tale. We got the monthly hook and cross steep slope angle separation. Remember what we said when the monthly hooks and crosses, what happened? The weekly cycle. We've done it. Been there, done that, right? This is why I expected this bounce. The question is the weekly going to go up and slingshot lower in the direction of the monthly? And we still get that last little flush down in here to where we get a lower low and then we get the breakout? Or is this the end and we just keep blasting off for the next 2 to 5 months and we go breaking out? So you look at the software and go, great, I understand why we bounced, and my daily's back and overbought, and I understand now why we're likely going to get that pullback we're looking for. So we then come to the charting platform and say, there's your magical level, ladies and gentlemen. That's Lucky Charms, magically delicious. This is magically important. So if we break down and close below this, the likelihood we're going to go lower low is very high. If we do a three-wave correction in this juncture, and what juncture is this? That low to that high, we do a little three-wave correction, and we hold above this one top right there, hold above after a three-wave, and then we go breaking out. You can pretty much stick a fork in. That's probably the lowest low we're going to see. And we're going to onward and upward stair step for years to come towards 7 to 10,000. Amen. Silver, still struggling right at the magic fibbo. Could this be the 1, 2, 3? Proportions are just barely. We're right there and we touched it. I like to see what gold did. Clearly break the 1618. So this is possibly the 1, 2, 3. It barely fits the criteria, right? Would have loved to see it go more like gold did. So you know what's coming, right? You can anticipate. You don't have to predict, you can anticipate. That swing point is critical. If that is the 1, 2, 3, and we do a little three-wave correction in here, and we hold above that, then we go breaking out above into a new high, the likelihood silver bottom there becomes very likely. But in the same breath, what if we start getting the correction and we close below that 60, whatever that is, 61, 61, especially say 61. I think it's officially 6092, 6092.9, so 6093. So we close below 6090. Houston, we got a problem. Everybody good? If this retracement closes below 6090, we're likely going to go lower low. But if we do a little three-wave type of correction and we hold above 6090 or just go to say 61, bounce off of that and then break a new high, then it sets the tone like gold. That's probably our low. And we're off in a multi-year climb, multi-year stair step onward and upwards to our target 150 to 200. And last but not least, we'll go ahead and summarize and finish this up. Bitcoin could grunt and grind. The big picture is, we'll go to the weekly. The big picture is what we know. We're going to go down to 50 to 30K. That's still the plan. At best, we rally toward the magic fibbo. We grind over here, and then we come up here, and then we go plummeting into October. I want to know what the low is in October. In my humble opinion, we're going to get to 50 to 30K zone. Anything at 50, I buy. Goes to 40, I buy a bunch more. Dips its toe into 30s, I buy back the truck up. And we're looking for that lower low. Were we going to get it? Typically in the rinse and repeat cycle, what do we do with Bitcoin? We buy low, we sell high, we buy low. When are we going to sell high? In fall of 2029 when it's 200,000 and above. Just like we bought below 20,000 and we sold above 120,000, we're going to buy below 50,000 and lower, and then we're going to sell at 200,000 and higher. And all of these, it topped in November 21, it bottomed in November 22, it topped in October 25, over here, October of 25 right there. We should bottom in October 26. So bottom line is, I don't care if Bitcoin hits 50,000 tomorrow, I'm buying. It hits in October, I'm buying. And then it goes to 40, I'm buying more. It goes to dipping the toe in the 30s, back it up, and then low buy, sell to hold. But what are we going to do? Next halving is in May of 2028, so we have some time before the halving. And what does Bitcoin do post-halving? It rips for 12 to 18 months. And that has happened every Bitcoin cycle. Even these that don't look like much, you stretch this out, it's massive runs, massive runs, massive runs, 12 to 18 months post-halving. So that's 12 to 18 months post this. would put us into the fall, and maybe November, December, could go a little bit later, but late 2029 when we sell above 200,000. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.